Hello everyone, I am Natharat Patrick Unlearn and welcome to the SEC and ISSB standards. In this episode, we will briefly look at the SEC public hearing on enhancing the sustainability reporting by adopting the ISSB standards. The Security and Exchange Commission of Thailand, or the SEC, requires listed entities to prepare the 56-11 report or the one report annually. This report encompasses sustainability aspect of environment E, social S, and governance G, as well as the financial reporting. There are three sections in the report. One is business operation and performance, two is governance, and three is the financial statement sections. The entity shall provide business for sustainability information in Section 1 and governance in the Section 2. Therefore, we can see that ESG disclosures are required in the one report. The disclosure can be referred to the framework set out by the Task Force for Climate-Related Financial Disclosures, or TCFD, or the Global Reporting Initiative, or the GRI. To enhance the sustainability reporting, the SEC aims to require listed entities to adopt the sustainability reporting standards set out by the International Sustainability Standards Board, or the ISSB. The ISSB is the standard setter under the International Financial Reporting Standards Foundation, or the IFRS. The SEC has launched the public hearing on enhancing the sustainability reporting in accordance with the ISSB standards, and the deadline for commenting is until 19th of December 2024. The ISSB published the first set of sustainability reporting standards, which are IFRS S1 and IFRS S2 in 2023. The International Organization of Securities Commissions, or the IOSCO, also endorsed the ISSB standards in the same year. The ISSB standards will be effective for reporting period beginning on or after January 1st, 2024, and in 2024, the International Auditing and Assurance Standards Board, or the ISSB, published the International Standard on Sustainability Assurance 5000, or the ISSA 5000, and the IOSCO also supported the ISSA 5000. We can expect to see the sustainability report adopting the ISSB standards for the first time in 2025, and the ISSA 5000 will be effective for reporting periods beginning on or after 15th of December 2026. Some Asian jurisdictions have put in place the adoption of the ISSB standards. For example, Malaysia, Singapore, and Hong Kong will require listed entities on a phase-in approach to adopt the ISSB standards starting from 2025 reporting period, while Japan will begin for the reporting period of 2027. For the SEC of Thailand, listed entities are required to adopt the ISSB standards by incorporating them into the one report on the phase-in approach. Basically, required entities shall add requirements set out by the ISSB standards into the sustainability report section of the one report. The SEC requires listed entities in the set 50 to adopt the ISSB standards for 2026 reporting period. In the following year, listed entities in the set 100 will be required to adopt the ISSB standards. Then, all listed entities in the set, both listed and IPO entities, are required to adopt the ISSB standards for 2029 reporting period. The last groups that are required to adopt the ISSB standards in 2030 are all listed and IPO entities in the MBI. In addition, REIT, IFF, Infrastructure Trust, and property fund are required to adopt the ISSB standards for the 2030 reporting period. Please note that early adoption is permitted, and greenhouse gas emission disclosure shall get limited assurance by certified practitioners or assurance practitioners who apply international standards such as ISAE, ISSA 5000, and ISO. Finally, entities in Life X are not applicable. The SEC also provides two classifications of transition reliefs. The first one is the 1-year relief, in that required entities can elect to apply the exemption on reporting the comparative information due to the first-time disclosure. The other is 5 years reliefs. Required entities can elect to provide only climate disclosure for the first 5 years. The SEC allows required entities to provide sustainability disclosures for the reporting period that is different from the financial statements reporting period for the first 5 years. Another relief is that required entities are allowed to calculate carbon footprint based on GSGP 2000 or equivalent methods. However, after 5 years, only GSGP 2004 method is allowed. The last reliefs is that required entities are exempt from disclosing Scope 3 carbon emission for the first 5 years. However, the limited assurance is still required for Scope 1 and Scope 2 carbon emissions since the first time reporting. The SEC provides some examples of how to determine whether entities are required to adopt the ISSB standards in the Appendix 2. The SEC will consider whether entities will be qualified as Set 50 or Set 100 in December of the year prior to the required reporting period and in June of required reporting period. If any entities are qualified in either one of the considerations, then such entities are required to adopt the ISSB standards. For example, if entity A, which is a listed entity, is qualified as Set 50 in December and also in June considerations, the entity A shall adopt the ISSB standards for the 2026 reporting period. The one report that the ISSB standards are incorporated will be published in 2027. If entity B, a listed company, is considered as Set 50 in the December consideration, but it is not qualified as Set 50 in the June consideration, the entity B is still required to adopt their ISSB standards for the 2026 reporting period. Another example is that if an entity C is a listed company, is not qualified as Set 50 in the December consideration, but it is qualified in the June consideration, then the entity C shall adopt the ISSB standards in the 2026 reporting period. Let's take a look at Set 100 group, which will be required to adopt the ISSB standards for 2027 reporting period. If an entity D, a listed company, is qualified as Set 100, both in the December and June considerations, then the entity D shall adopt the ISSB standards for the 2027 reporting period. If an entity E, a listed company as well, is qualified as Set 100 in the December consideration, however, it is not qualified in the June consideration, the entity E is still required to adopt the ISSB standards for the 2027 reporting period. For an entity F, a listed company that is not qualified in the December consideration, but it is qualified as set 100 in the June consideration, the entity F shall adopt the ISSB standards for the 2027 reporting period. Now we will look at an IPO entity example. If an entity G files for IPO in August of 2025 and it is qualified as set 50 in the June 2026 consideration, the entity G shall adopt the ISSB standards for the 2026 reporting period. The last example is that for an entity H, an IPO entity files for IPO in May 2026 and is qualified as either set 50 or set 100 in the December 2026 consideration, then the entity H shall adopt the ISSB standards for the 2026 reporting period. And that is all for this episode. Thank you very much. สวัสดีครับ